Hello folks, welcome to Cafe Iktisad. It's Quick Econ series. This is your host Shahid Mahmood. I'm an economist by profession with around 2 decades of experience. And today's topic we are going to talk about stablecoins, something that has been in the news of late. So let's start with what's a stablecoin? Well, stablecoin is a cryptocurrency, and it's also a financial instrument based upon cryptocurrencies. So what's the difference between a stablecoin and a cryptocurrency like Bitcoin or Ethereum? Well, the only difference, and in fact the major difference, is that stable coins are based, they are pegged to a currency or some underlying asset. In this case, for example, most of the stable coins nowadays are pegged to the United States dollar. Pegging means that basically it means that their valuation, the movement, it follows the movement of that underlying asset. So if the value of dollar goes up, you would expect the value of stable coins to go up. But if the value of stable coin goes down, you would dollar goes down, that underlying asset, you would expect the value of stable coin to go down. And it's not just in dollars that they are pegged to. There are stable coins that are based on other currencies like pound, euros, Japanese yen. So there are many versions of stable coin. There are some stable coins that are based on gold too. So basically, so the second question, what was the need for coming up with the stablecoin? Well, as the name suggests, stable. If you see the prices of cryptocurrencies over time, one of its characteristic, one of its features is that there is a lot of variation. There is in the prices. It's you have got jumps, then you've got sudden declines, precipitous declines. There are precipitous valuation that goes up, then it goes down. So for an investor, especially the ones who want to invest long time, they don't like this kind of variation, this kind of uncertainty in price valuation or the valuation of an underlying asset. So if you see the Bitcoin, for example, about in January, its price dropped precipitously from more than 100k to 100k $100,000 to a Bitcoin to around $82,000 a Bitcoin. So that's a very precipitous decline. One of the ways, one of the strategies to counter this kind of the sudden variation or sudden loss in value, and it is followed in other financial instruments too, like money market funds, and then you have uninsured banks who do offer these kind of uh, pegged financial instruments. So stablecoin is something like that. So that's one strategy to come over, or to come over that variation, to that uncertainty, is that you peg it to a currency or an underlying asset whose valuation doesn't change much over time. So if you see the value of dollar, for example, on which a lot of stable coins are based, its value uh, doesn't change much around. It's a trend line. You would see some movement around a very narrow band, that sometime it would go up, sometime it would go down, but there are no precipitous declines or precipitous jumps like that, like the one that we observe in cryptocurrency. So that's the reason that the crypto industry and the financial industry came up with these stable coins, is that you have to, for long-term investors who are more interested in having returns that have less volatility, or fixed returns, kind of fixed returns. So they introduce this financial instrument or investment instrument based on or pegged to a currency or to an underlying asset that doesn't change much. So that kind of guarantees fixed returns. You know that your returns in a month, or in a quarter, in a year, they won't change much. There might be some variation, but there won't be any precipitous valuation declines which might hurt the investor. So that was one reason that and another reason there is another reason that it was felt that you need to introduce something like that, and that has to do with very strict anti money laundering laws, especially the Financial Action Task Force laws. It's a way to get around that, and I'll just mention it again. So what makes it popular? The first thing that obviously makes it popular is that, like cryptocurrencies, it's a decentralized forum. The second thing that makes it popular, as I suggested, it's a stable coin. It has got stable returns rather than a lot of variation in its return. The third thing that makes it very popular, as I discussed, is that it's an innovation to get around the very strict money laundering laws. And a lot of payment platforms like PayPal, they've introduced another a parallel payment forum based on stable coins to get around those FATF strict laws. For example, the traditional payment platform on PayPal, that's based on Zoom and Vimeo, and if you have to transact on that, you have to give your ID, both the parties, the one that is sending the money, the one that is receiving the money. It has to go through very strict checks under the FATF laws. But then PayPal has introduced a stablecoin based PayPal stablecoin US dollar platform. I think it's that name. I'm not sure, but I think that's the name. So if you have to send money, two parties have to send money over that platform, you don't have to follow those FATF strict laws, and it maintains the anonymity. So a lot of other forums like PayPal have also introduced stablecoin based payment system. And last but not least, should you invest in Bitcoin? This question comes up often, and some people have asked me this question too. Well, you need to recognize two things. First of all, not every stable coin has the same valuation, and now in case of dollar. Wherever you take the dollar bill, if it's a $10 bill, if it's $100 bill, or a euro or British pound, it's perfectly substitutable because its value is not going to change. Wherever you take it, its face value would remain the same, but its valuation would remain the same. But in case of stable coin based on cryptocurrencies, the valuation is not going to be the same. It won't have the same value. It won't Every stable coin won't have the same value, means they are not perfectly substitutable. And why is that? Because unlike dollar bills or a pound bill or a euro, they are not backed by any government. They are backed by forums. They are backed by firms, in fact, sorry, firms that have different valuations. Now a firm might go down, might go up. So for example, Bitcoin based exchanges like Binance, it might do well, it might not do well. You had so a few years ago, you had one of the forums, I think I can't remember the name right now, but it just crashed. So these kind of things do affect the stable coins. Saying that, it does offer, as I said, it does offer more stability in returns, which makes it more attractive. But do remember the thing: if you want to go for stable coins and stable coin investment, it, they are not the same. One stable coin, for example, issued by Ethereum, it won't be the same as the stable coin issued by, say, PayPal or another forum. Another thing that you need to keep in perspective, you want to invest in stable coins, is that it's increasingly coming under the FATF and anti-money laundering radar. So just about, I think it was back in November 2024, that the Swiss financial regulator, they came up with new laws that stablecoins do have to follow, and these are just like the strict laws of FATF. So it's increasingly coming under the radar of anti-money laundering laws, which would make it even a bit more difficult to keep that anonymity. So that's something that you guys, anyone who wants to invest in stablecoins, that they need to keep that in mind. Well, that's it for the quick econ series of today. Hopefully, I'll see you next time. Stay tuned. Goodbye and take care.